the nice things about IFRS is that if you can, structure your option plans, for example, in a way where you value the options that you granted to your employees, etc., you don't have to go through that Black-Scholes calculations. Instead of being half your income statement, it might just be 10%. Lots of clients always pressure us back about some of the mineral properties or oil and gas properties that we previously believed needed to be written off. One of the nice things about IFRS is that if proven, you can reverse some of those impairments, some of those old assets that you've written off. So there are definitely some positives out of it. Like Warren Buffett always says, I always say that, 40 years ago, he always used to say financial statements were about this thin, and I understood them, and now they're about this thick, and I don't get it. And that's, and for good or for worse, it's getting into more disclosure as the world expands and people are always cover their butts type of philosophy. It's always going to be more or less. And as I always say, we don't make up the rules, we just play by them. So keep that in mind. So now, I don't know if we have any questions there. Do we have a few? Okay, so we'll take a few minutes to answer some of the questions, and then who's ready for a glass of wine after that? So we'll shortly go through that. If anybody wants to ask anything at this point as well, or at the wine, or of course you can always give a shout whenever you like. So maybe we'll go through a couple of them right now. What do we got? Okay. So by the way, we recognize everybody's handwriting here, so we all know you. so we know who's asking these questions for the most part.
So this question relates to stock-based compensation, and it's an area that all you guys everybody's interested in, definitely. And I'm just going to go over some of the points again, because it is changing, and it's important that you understand in terms of the way you're calculating your stock-based compensation, how it works. So the question is, are companies considering changing the method of January 1, 2010 in terms of the straight line to the accelerated or graded vesting method? You have the ability under Canadian GAAP, and I didn't clearly explain this, and I'm very glad that somebody asked this question. I should have touched on it, but I didn't, to use the graded vesting method. You can't elect to use the graded vesting method now, so on your upcoming period, your transition date, you can change your policy from straight line to graded. That's okay. You don't have to keep two sets of books that way. And that's what we are suggesting that most of our clients do, is switch to a graded vesting method for their upcoming accounting periods. That way, you're not going to have the IFRS Canadian GAAP differences. You're not going to have to do a reconciliation on what you had reported on your 2010 period, assuming that you got it December 31st year end. You're not going to have to restate that from the straight line to the graded vesting method if you elect, beginning January 1, 2010, to go with that graded method. The second question is, will companies be required to calculate a forfeiture rate based on complex statistical formulas, or can it be estimated using a percentage? I think in our companies it can definitely be used. An estimate can be used. I mean, you know generally who these options are being granted to. You know traditionally how long this consultant's been with the company, or how many consultants you've had in the past in that particular role. Your CEO might not change very often, so if you're giving your options to your CEO, you know probably 100% is going to vest. You're okay with that number. But it is going to have to be done on a case-by-case basis. You'll need some backup, similar to, really it's going to be similar to a volatility calc, in the sense of, like, let's look back at our history. Let's see what traditionally happens. I mean, you don't have to go too detailed, and you don't have any statistics available on Yahoo Finance or Google that are going to tell you what that percentage is. But traditionally what's happened with that role, and you can figure it out based on that. So I hope that answers the question.
Okay, we have a couple questions here. One of them was a point I wanted to mention. How in your MD&A currently, put that one section where you put your quarterly information for the last 8 quarters. So if you can imagine March 31st, 2011, you're doing your financial statements, and how are you going to come up with what those 4 quarters are going to look like over the past 8 quarters? Because you really haven't, you know what what that last quarter is because you've just done it, and you've also looked at your comparative quarter, the March 31, 2008 number. But what about all of those other numbers? They said for certain that if you go back, the last 3 quarters, which are going to take you into 2009, those can be in Canadian GAAP. So you can just have an asterisk beside those numbers and just say those are in accordance with Canadian GAAP, and you don't need to restate them. The one part that they're talking about right now is what about the quarters that took place during 2010? Because you can figure out the first quarter of 2010 because you've already looked at it when you were doing your first quarter of 2011. What about Q2, Q3, Q4? It's going to be a fair amount of work, possibly, to go in there and try and figure out what those numbers are going to be. Because you haven't really dealt with Q2 under IFRS yet, and so on. So they're looking at those 3. So the last 3 they said we're going to give some relief on, and the other 3 would sort of fall in the middle there. In 2010, they're looking at what to do about that. So there might be some relief there, because as you can imagine, that can be a little confusing. Another question, once you've gone to fair value, can you go back? The answer is pretty much no. When, as Rob touched on, there might be some reasons you've got some assets in your balance sheet and you think, oh, if I revalue them, my balance sheet looks great. Well, the problem, of course, is you're going to have to do that every year. You can't just do it when it's convenient for you. Like it looks great this year, and then I don't have to deal with it next year. I'll just go back to historical costs and back and forth. You have to sort of pick one, and that's one of the under IFRS 1. That's one of the decisions you're going to have to make. Am I going to go fair value, or am I going to stick with historical costs on my assets? Okay. There was 2 other points that I just wanted to bring up. They're not questions, but early adoption is something that people talk about. There certainly has been some companies that have early adopted. Really, at this point, there's really no point early adopting. You really be talking about this annual period coming up, and if really you're just sort of getting to it at this point, and what is the impact? I mean, you really would have to have started that whole process about a year ago. So, trying to early adopt at this point would be quite tricky. Also, as we discussed, what's out there as far as disclosure requirements and that sort of thing, it's very limited. So, I mean, you're much better off waiting to see what happens over the next 12 months. It's going to make it much easier for you down the road. And just one other thing, I don't believe it was mentioned. I was talking about the U.S. They're actually going through a codification process right now. Some of you may have heard. So they want to converge to IFRS eventually, right? That's the plan. So what they're doing right now is they're going in and basically renumbering. I'm not exactly sure how the U.S. handbook is set up, but they're figuring out the handbook so that it looks more like IFRS. So that down the road, when they do make the convergence, it's going to be a lot easier of a transition for the Americans to go from one to the other, because they'll be gotten more familiar with how things are going to look, and so that's one thing that's sort of happening right now as well. Helpful there?
Okay, I got a couple questions in that I think are about business combinations. And one of them that says, Erez, can you please tell me what the meaning of life is? It doesn't actually say that, but I don't know what the meaning of life is. So business combination is actually, it's a great question because it is different under IFRS. And of course, a business combination is typically when you've got one company acquiring another company, and that other company is defined as a business. So it doesn't necessarily mean that you just acquired shares, but it means you acquired a business such as an operating company or potentially an oil and gas entity that has reserves, etc. So you've got a business combination. What is the difference? Well, the first point is that if you're acquiring 100% of another business, you will not have differences between Canadian GAAP and IFRS. It really relates to if you acquire less than 100% and you got a minority interest position. So I don't know if you remember back to good old accounting class, but the way it is under Canadian GAAP is when you acquire a business and then you've got those fair value bump ups, and you take the percentage as you acquire. So let's say I acquire a company for 70% of another entity, and there's some fair value bump ups and downs, and I used to take 70% of that bump up. Well, under IFRS, you're going to take 100%. So it's kind of what's called from the full parent point of view. And what that really means for minority interest is that it's going to be at fair value. And that's a pretty big difference, because in the old days, you used to be able to look at the net book value of your subsidiary multiplied by your percentage interest and really get that minority balance. Now it's going to be different IFRS. Your minority interest balance is effectively going to be measured at fair value, and then you're going to be acquiring the fair value bump ups as if you acquired 100%. So when you picture your balance sheet, what that actually could mean is that you could have minority interest in a debit position, because in the old days you used to grind down your minority interest to zero and then suck up 100% of the losses even though you only own 70% of it. Now you could actually get into a debit position, and it's no longer going to be in that what we used to call mezzanine section between liabilities and equity. It's going to be within your equity section. Now that's quite a bit here to try to explain, but really what you want to get out of it is that if you're going to acquire another business under IFRS and it's less than 100%, think about it. You know, don't just assume it's the same under the old, but you may not have any differences. There's a second question here. It just says, can you please comment on consolidated financial statements, i.e. Canada plus Subco South America? I'm not sure if that person could raise their hand if they want, but if that person is asking regarding business combination, that's the answer. If it's asking about, sorry? It could be currency. If you've got if you've got a South American subsidiary or an African subsidiary, whatever it might be, that conducts its transactions in a different currency other than the Canadian dollar, there really aren't any differences in terms of translating those financial statements. You'd still use the current rate method or self-sustaining if it's considered a self-sustaining entity, i.e. if it's not dependent on the parent for finances, etc. Or you use a temporal method, what's called the integrated, if your subsidiary is reliant on the parent for financing, etc. The one actually thing, and I think Rob touched on that earlier, is that under IFRS you can, I think, get rid of your opening cumulative translation adjustment balance. So typically that kind of, and I think you put it to deficit?
Yes.
Or your retained earnings. So that's kind of nice. If you've got a subsidiary that translates using the current rate method and you got this big cumulative translation adjustment balance, and you could never really figure out what that number really meant. You can sort of offset that against your deficit, and then maybe reduce your deficit, right? Which is also a nice thing. Okay.
And I've got one more question here, and I'm not exactly sure what specifically is what the person is interested in, but I'll read it and give the best answer that I can on it. What effects on asset-backed commercial paper and stock-based compensation? In terms of asset-backed commercial paper, there isn't any specific guidance on it. It's a Canadian issue right now. It's IFRS. We haven't seen anything specifically deals with it. It's a very technical issue as well, and I'd suggest if you're dealing with that issue that you contact your principal or partner. We can work through it. And it's difficult for me to really say just because it's such a general question. In terms of stock-based compensation, if there's something that I didn't explain well, please ask another question. But I think I've covered off most of it. Graded vesting, you're able to use the same valuation methods, Black-Scholes binomial method. That's really it. Fair value of non-employee options. That's going to be the big difference. You're supposed to do fair value before you do Black-Scholes on non-employee options and explain why you're not using fair value if you decide to use Black-Scholes. Okay, so those are the questions we received. I think at this point we'll probably wrap it up.
You know, one of the things that we'd like you to come out of this room and think about, well, where do I go from here? And what do I do right now? Just think about your MD&A and financial statements. Think about, what are you saying with respect to IFRS? Are you saying, we heard it's out there and we're still thinking about it? Or are you saying, we know it's out there and we're doing something about it? So come out of this room and look at your December quarterlies, your annual financial statements and MD&A, and think about, what are you saying in there? Because at this point, you should be starting to identifying the differences between Canadian GAAP and IFRS. You don't have to quantify them at this point, but you got to start thinking about it. So, like I said, go back to your MD&As and financial statements. And December 31st, 2009 is really kind of when you want to start paying attention to the detail of your disclosures. So I'm not sure, is the reception back? Is it ready? Yeah. Okay. So of course, just outside the room here, we're going to have a few cocktails. We hope you all stay for a couple hours and come say hi and ask any more questions that you'd like. So thanks very much for coming today.